Today, we'll talk about real trading examples and practices with this lovely indicator called ICT High Time Frame Candles. For the next 2 hours, we will go over 20 trade practices with top-down analysis. How do we spot entry areas? How to find our bias? How to determine market structure? And how to make our entries and so much more. If you're ready, let's go. Today, I want to talk about Solana, one of my most favorite coins to invest and trade sometimes. We will be looking at the recent price action and possible trade chances. We will improve our trading skills starting from the weekly charts and do a full top-down analysis. When you look at the Solana in the weekly chart, you can see that we were in this massive rally recently. Price moved from $120 to almost $250 in a matter of weeks. You will notice that prices were taking previous highs recently, weekly highs. This is the power of buyers. Buyers kept pushing the price and rallied to almost all-time highs again. Now, let's talk about the momentum chart a bit. In the momentum chart, we'll be using our best indicator called ICT High Time Frame Candles. So, this indicator shows me that there was this massive rally recently, and now the price was pulling back into these imbalance zones. 30 minutes, you cannot see now, but it is there. 45 minutes, 1 hour, and 2 hours. A massive area to look for entries. Okay, now I want to talk about the lower time frames. This is the same chart, but much lower time frames to seek an entry. This yellow point area is where the 4 higher time frame imbalances are located. Right at the top, I can instantly notice these lovely equal highs. Now we have a combination of the previous week high and the equal highs together. Much more reason to go up. Right around our entry imbalances, as you can see, structure breaks and creates our entry imbalance. And it gives you this magnificent almost 4-hour setup. But not so fast. How and when you know that we will hunt the previous week high? Can you see the future? I do not think so. Do not build fantasy setups. Be compact in and out with 2-hour or below setups. This will be much better to control and work on. Then you can leave some trades as your runner if you wish. You need to create a win-win situation. Now, here is the big problem. When we have a high time frame bias like weekly highs, that gives us a bias to move towards, a direction to take trades. Bias is for bias. Bias is not for trading. So what you do is take compact trades with your bias. Do not build big fantasy setups. And if you struggle, keep using the MASTERCLASS order management techniques. Before even trading, let's take a look at the day first. As you can see, we have a strong gold today, but stock markets are on the weak side. Also, do not forget, stock markets were in the pre-market when I was looking at the charts. So at the end, world is a mixed bag right now. However, we have these extremely strong totals. After the mini crash, coins are getting their power back, especially today. The major coins doing really great. Bitcoin wigged the 90K and now powering up again up to 95K. And the dollar is really weak, as you can notice. So, all in all, By looking at this, I can say that we are in a really great strong day, a good day to look for long trades. Scalping was the interesting top gainer today. It was in the 5 top gainers and it was aiming for higher. When I look at the weekly chart, I can see that it was coming from a really long accumulation period. And with the recent elections, Donald Trump and Elon Musk, this coin also powered up. It was just a little bit late boomer. What was fascinating is this weekly imbalance point as our bias. It was riding to tap it. It was so powerful. In the daily chart, you can see that this coin used this inner daily imbalance for the last jump before touching the weekly imbalance. And if you look at the history, the patterns, it was using its daily support and resistance flip points to make the next jumps. All good and great. We have power and the bias. But how about the momentum? This triple imbalance point area was our last fuel station before the weekly imbalance point. Remember, more imbalance taps are better for us. So, what we are going to do is try to explore this area in the lower time frames and learn about different kind of entry models, risk management, and order organizations to make better decisions. Okay, let's observe this low time frame chart and educate ourselves on the progress. First of all, you can notice the nice liquidity gathered right below the weekly imbalance. I showed this many times, many examples in the masterclass. This is a great smart money trick. At the bottom, we have this large 5-minute imbalance and the deep order block. Plus, we have this nice support and resistance flip area. So, if you ask me, this was the best possible entry location to take an entry. But life is not sunshine and unicorns. Not everything works as we plan. If you get even closer, you can notice that price taps 5-minute imbalance, accumulates, sweeps the liquidity, and then breaks the structure. Finally, it rallies towards the weekly imbalance. What you see here is actually a small version of a power of 3 combination, which we learned about free trading lessons with many examples. However, in my opinion, this is a very tricky trade here. The bottom area confuses me a lot. So what can I do here? What kind of order and risk management that I can use? Option 1. I would use this gigantic 1.5 hour setup and cover my deep area. If I do this, I would feel really comfortable with a trade against possible pullbacks. Because in this trade, in this position, we have a high risk of deep pullback here. What else can we do? Second option is our masterclass yo-yo averaging system. Nothing too big or complicated. For such a trade, I only look to cover the bottom area. So I would only need 2 positions, a simple average, to protect against me a possible deeper pullback. As you can see, strategies may change. They are only for finding ourselves an entry point. What we need to learn is our order management, how to divide our orders into pieces, and how to be clever about managing the risks. Because we do not know the future. We can only know and control our risks. When I was looking at the top gainers, I noticed the hook coin. It was not the number 1 top gainer, but it had a really interesting price action. If you're ready, let's observe the price action and talk more about this coin. The daily chart was really interesting first of all. Price was trying to fulfill this imbalance area and try to tap the order block above. There was this intense buyer power kept pushing the coin higher and higher. If we just zoom in the area, you can notice that price was using imbalances and occasional support and resistance flip areas to move upwards. So, as you can see here, what do we have? We have a strong daily power and we have strong daily bias. Great high time frame analysis with certain direction. It is time to use our best indicator, the ICT high time frame candles. Before we start, please check this indicator. It has gotten many updates and fixes recently. Try to update it when you have time. As you can see, our indicator shows that the earliest rally started at the way bottom with these three imbalance step areas. And that second leg of the rally started right in the middle with the imbalances again. And the last and the third rally, again the same structure. So what we're going to do is we will observe the rally 2 and rally 3 and talk more about entry models. Now this is the close-up chart in 1 minute time frame. This is where the rally 2 started. Sorry about my mistake. It is supposed to be labeled it as rally 2. And the last and the final rally again right here. Again, I meant the rally 3 here. Sorry about the wrong label. But you got the idea anyway. So these two locations are where the price fell into multiple imbalance points in the momentum chart. If you look at this larger image, you will get a much better idea. On the left, we have 1 minute chart, and on the right, we have 30 minute, 45 minutes, and 1 hour charts. All charts in the one single screen. You can see the sniper precision. This is why we keep talking about the importance of combining high and low time frames together before taking any kind of trades. So, if we look at the first entry area, we kind of have a small structure break or a masterclass price switch with a large, big imbalance. I actually built a setup here, a very simple 2-hour setup, but the price never pulled back deeply. Buyers were so strong and the price flew away without me. And the next rally point, the same thing, the same similar structure happened. This time we also had this great support and resistance flip area. So at the end, as you notice, what we do here is not very or extremely complicated. We use one strategy and one indicator and looking for the same or similar setups over and over again. So what is the problem then? The biggest problem we are facing is time. Waiting for the right setup takes too much time sometimes. I think the biggest challenge of all traders in the world is the time itself, and unfortunately we cannot fix this. Okay, you woke up today and decided to take some trades, but before anything you need to check some things. How are the markets doing? As you can see, the world is quite flat nowadays. We do not experience very strong rallies with stock markets or gold. However, crypto is not the same. If you remember on Twitter, I said that once we broke the 100k level, there could be a deep pullback. Totals are very weak today, as you can see. This shows me that whole crypto world is weak today. When I look at the major coins, it is the same. Solana and Bitcoin are especially weak. And look at the USDT dominance, how strong it is. So altogether, all this picture indicates to me that we are in a really weak day. It is better to look for short trades rather than long trades. Zcoin was in the top 3 loser coins today. It was very interesting and educational to study. As you can see, we are in this large imbalance area in the daily chart with a support and resistance flip at the bottom. This coin tried to rally really hard a couple of days ago. It actually rallied $65 to $75, a 20% rally, not that bad. But today was a really weak day, as you notice with the totals and the major coins. And this coin could not hold its rally. So the question is this. This coin tries to fill this daily imbalance and top this SR flip area or not. This gives me the bias idea for this coin. When you open the momentum charts, I'll teach you an easy trick. Just observe the previous imbalances. That will tell the story. If you look at the right side, the 2-hour time frame, you will notice these gigantic bearish imbalances. This is my first sign for the power of the sellers. Then the failure of this bullish imbalance shows me the weakness in the buyers. A simple and quick trick to understand which side is dominant. Rest is about finding an entry location. If you notice this area, you'll notice that price pull back and tops 3 imbalances right at this area. So this zone gives me ideas about where we can enter or where we can seek some trade opportunities. Now, we are in the 1 minute time frame to get a closer view on the price action. Right here at this point, this yellow circle is where the price taps 3 imbalances from the momentum layout that you just saw in the previous section. It clears the liquidity with a swing failure pattern, and the above imbalance forced the price down. This is where we have our market structure break. Let's have an even closer look at the area and talk more. First of all, I'm gonna admit that it is not easy. You see, after the structure breaks, the price pulls back and taps the imbalance and straightly falls down. Let me ask you a question. How many of you can catch this movement just at this moment? Probably not many. So, what can we do about this? The only solution is jumping to trade with divided orders. This is why half of my trades involve MASTERCLASS yo-yo techniques. Why do we cost average like this? Because most of the time it is impossible to catch the perfect entry point. Not because of our strategy, it is all because of perfect timing required. But if you use a simple cost average with divided orders, you can catch a trade like this, a 7% movement here, instead of trying to achieve a perfect sniper all the time. All you need to do is cover the logical entry areas with divided orders. A simple strategy, a simple master plan. Divide and conquer. This way, you will catch most of the trades without failures. Okay, let's talk about this Omni coin. I was watching this coin a lot this week. It had very interesting and educational price action to learn and improve your trading skills. As usual, we will observe this coin starting from the weekly and do a full top-down analysis. When I first look at this coin, this very large weekly imbalance interests me so much. Price struggles way too much inside this imbalance. Remember, the purpose of any kind of imbalance: push the price and create new break and let the trend continue. But this imbalance fails really badly and the buyers take the control back. When we take a closer look at the price, there is very exciting price action here. Extremely large wick which pierces the imbalance, but the imbalance holds really well here. It is just like a tennis ball, but this rejection wick is just insane. It is a 40% rejection. All I can say is that there was an insane manipulation here. Big whales manipulated the price and liquidated so many people here. But I love big rejection candles in the high time frames. It means that many people are already manipulated. Now the normal rally, normal price action may start. When I look at the momentum layout, I use our best indicator as usual, the one called ICT high time frame candles. By using this indicator, I can point out and learn about the pattern of the asset. For example, you can see that earlier in a rally started right here at this point with the 4 imbalance steps. And this is a very repeatable pattern for me. If you look at above, the exact same thing happens one more time. The secondary rally starts. Then I activate the 15-minute chart as well on the left, as you can see, all the inner highs started being taken out. This also proves me the buyer power in the low time frames. Okay, now let's observe the rally to right at this point in much more closer price action. Okay, we are in the 3-minute chart to talk and learn more. Remember, this is the close-up point of 4 imbalance steps happening in the momentum layout. Right at this point, you'll notice an almost failed imbalance followed by a momentum imbalance. Basically, a masterclass price switch. Now let's zoom out and talk more about the possible entry models. Let's assume that you noticed all these price actions really late. What can you do about it? First of all, you have a very strong indication on high time frames with the big rejection in the weekly chart and supported by momentum layout imbalances. So our idea is longing this price. I do not have to be paranoid here. After a micro price switch or market structure break, even if I am late, I can build a simple in and out 2-hour setup here. A quick get in and out, as you can see. Will it work or not? I have no idea, but my bias is long here. Or if I am really late to enter the trade, I can just divide my orders into pieces and use a quick masterclass yo-yo entry. So this way, I can try to grab a very quick, very tiny move from the market like 3-4%. Again, a quick in and out. However, the rest of this move is just a fantasy. I do not know the future or I cannot see the future. I get in and I get out, control my greed and risks. This is the only secret of surviving in the trading game. Okay people, a new week start with new chances. Cryptocurrencies were crumbling in the last couple of days, but this week looked rather stronger and powerful. Today was generally a strong day. Strong totals and major coins were the first sign. And the daily wick USDT dominance signed us for a possible long trades. FXS was the obvious choice today. It was the #1 top gainer in our coins list with an average of 30% gain in a single day. Weekly chart was looking great. This coin shifted its structure a couple of weeks ago and it was just pulling back deep into this imbalance. Supported by the imbalance and the order block, it was the reaction day. In a way, this is why this coin was the top gainer today. Above, we have this nice target area. However, it is far away at the moment, a future goal maybe. Let's drop to the daily chart and talk more. First of all, notice how these inner imbalances failed here. Price piercing through at one single movement, showing a nice power for the buyers. As a closer bias and target, I think this is more meaningful to choose this inner BPR area. Okay, all great. How about the momentum? As usual, we will use our loved ICT high time frame candles indicator. With this indicator, I can point out possible rally starting locations. I know that after extreme movements like this, it is hard to get into trades. However, these simultaneous 4 imbalanced top points were a great location to seek lower time frame entries. If it's all clear, let's see what happened in the lower time frames right now. Okay, now we are in the 5-minute chart, just at the point of 4 imbalanced taps. First, you can notice the gathering liquidity above. Right here, you can see how the structure shifts and our initial structure box comes into life. Do you remember the weekly chart in the beginning of this video? Exact same thing happens here, and an inner imbalance with order block. 5-minute or weekly chart has no difference. It is just fractal price action. This is where you build your 2R in and out setup without any greed, because we do not know what will happen in the future. In the trading markets, we need to get out as quick as possible after our trades done. One thing bothers me a lot in this chart. Price never tapped this inner 5-minute imbalance. So, there was this possibility of dropping more before the rally. It can happen, we do not know. Sometimes price action can be really tricky. When you encounter these tricky situations, it is best to divide your order into smaller pieces so you can enter easily. Let's take a look at the number 1 top gainer coin of the day, GTN. But before that, let's get an idea about today. Today was a strong day with the totals, as you can see. That movement also supported by the major coins like Ethereum and the Bitcoin. USD dominance was fairly weak today. All these indicates a nice, strong day for us, so we can look for long, bullish trades. The moment I saw the GTM coin from the list, it was already pushing like 30%. It was by far the strongest coin of the day. The daily chart was really interesting. Price reacted to this imbalance here at the bottom. And you can notice price started to consolidating for a while. Sellers finally lost the power, then the mega moment came. It destroyed this inner imbalance and headed towards the upper imbalance, as you can see. It was also trying to clear out this parabolic liquidity right below the imbalance area. When you switch to the momentum layout, you can notice the power of buyers in the last overall 2 days. Pullbacks are really small, but the rallies are gigantic and fast. This shows the power of the buyers. Just a couple of hours ago today, the same thing already happened. Price partially pulled back to this inner imbalance area. A slow and a limited pullback. Then the final rally ignited. Let's talk about 2 types of masterclass entries we can do here. First, the 5-minute chart. Remember this yellow point? Right here presents where the price hit the 30 and 45-minute imbalances and started to react. First, notice the perfect example of a price switch, which I teach in the masterclass. Bearish imbalance fails, and bullish imbalance appears. Basically, a price switch. And the rest is very simple rally entry, jumping to the rally with a market order. No hassles, just a quick entry. You ride the rally like 3% and get out immediately. You are done for. No greed. in and out. Now let's drop to the 1-minute chart and talk about more classic smart money entries. First, notice the liquidity gathering above and the swept liquidity right below. A small inner market structure right inside this gigantic imbalance area. What else supports our ideas here? Again, notice this failing mega imbalance. Failure of this imbalance gives us clues about the weakness in the sellers. The rest is simple 2-hour setup with in and out entry again. No greed, no fantasy. We just take our profits and move away. Let's talk about what was happening on this lovely Sunday. If you opened the charts today, first thing you were going to notice was this. Totals were crashing badly, along with all the major coins. Plus, the USDT dominance was really positive. By looking at this, only this, I can easily say that today was a weak day and taking short trades would be more beneficial rather than the long trades. The first coin I noticed was this virtual crypto. It was the number 2 top loser coin of the day. With the help of our lovely indicator called ICT high time frame candles, we will try to observe this multiple time frame price action. First of all, notice this little imbalance here. Also in all other time frames. This imbalance was supposed to push the price higher and higher. And it failed really badly than the opposite imbalance created with the momentum. You can also notice that it created this bear structure break here. Then the price pulled back and tapped this multi-time frame imbalance zone. Now, let's observe this area in extreme detail with lower time frames. Okay, now switch to the 15-minute time frame. Before moving on, let's have a larger perspective here. Notice the considerable swing failure pattern here and the extremely large parabolic liquidity below. All this waiting for us to be taken out. Moreover, we had this previous day low below as an extra liquidity. Okay, great. We have an amazing setup here. Now let's see the 3-minute time frame in this area or in other lower time frames to check out. First, I think you notice here the same but very small version of the same price action, a swing failure pattern, followed by a weak break. But the area is not really clear, not giving us a very nice, clear, simple risk-reward trade here. However, then after some consolidation, the price is crashing with this gigantic inner momentum imbalance. At this moment, you cannot no longer use the traditional risk and reward. This is where you have to jump the trade with a market order, just like I teach you in the masterclass with the rally strategy. It is the same, but this time the price is crashing and I call it crash. Then you just seek 3 or 4% move, get in and out, be done with your day. Because as day traders, markets are very tricky. We have to get in and out as soon as possible. Let's learn how to take some sniper trades on a chilly Sunday. We will discuss everything from A to Z. The moment I opened the trading view today, I just checked my market list. Totals were in really bad shape and negative. Major coins like Bitcoin, Solana, and Ethereum were also very weak today. And the USDT dominance was on the stronger side. This was an overall weak day. Taking short trades was a better idea than long trades. And I found this coin called SYNUSDT. How did I find it? Simple, I just sorted my futures coin list and it was the number 3 top losing coin in the day. But why did I select this coin rather than the number 1 or 2? As you can see, we are now in the 45-minute chart. Notice these imbalance points. Sellers were strong on this coin. Now we drop to the 30-minute time frame. Still, you can see the 30-minute imbalances, multi-imbalance top points. If you go down to the 15-minute time frame, you will also notice that we have another set of imbalances here. So, it was a really weak day, and this coin was also really weak. Sellers were controlling this coin. Now let's drop to the low time frames like 2 minutes in this case. Notice what happened inside the first set of multi-imbalance points from 15, 30, and 45 minutes. And notice here the inner structure break. It is followed by a 2-minute inner imbalance. Right here, it was your first possible trade idea. But unfortunately, all these actions had already happened. It was history. However, I expected a similar action to happen again, at least one more time. After all, charts are full of repetitive patterns. Price broke and created this inner support and resistance flip zone right around our high time frame imbalances again, 15 minutes, 13 minutes, and 45 minutes. Later on, notice what happens. Exact same price action. Inner structure break followed by a 2-minute inner imbalance. This was your second chance of entry. It was 100% the same trade with the first trade. It was a repetitive pattern, as you can see. A sniper location. If you are confused, let me recap all the price action in simple terms. First, today was a weekday with negative totals, negative major coins, and a powerful USDT dominance. And the SYN coin was one of the top loser coins of the day. So, I thought that taking a short trade was a better idea today. The rest is simple masterclass price action. Here is your chart in action. Price sharply drops and creates these multi-time frame imbalance zones, and price pull back into this zone. An inner structure breaks with an imbalance. Our inner target is this recent old low. As you can see, a very simple trade idea, but we missed it because it already happened. Later on, price breaks and creates this nice support and resistance flip zone, an overall zone. An exact same price action happens. Multi-level high time frame imbalance zone, price pull back to this zone, and then an inner structure break with an inner imbalance. And here is your chance of sniper entry. This type of movements keep happening every single day actually. What you see here is the Bitcoin chart, and this pattern is very common with 4 hours and under time frames. This is actually one of my most favorite patterns. Let's explain it step by step. As you can see, price strongly breaks upwards and it creates this structure box. This bullish structure box confirms that buyers in the current control, and they will need to protect this low at all costs. And the imbalance areas like this one here are great areas with cheap discounted prices to look for some trades. Let's drop to the 15 minutes time frame and talk further. This pattern generally has some sort of liquidity points for the extra fill. Price generally allows to sweep these liquidity areas such as these equal lows as in this case. As you can notice, price swept equal lows and tapped the 4-hour imbalance. If you have been following my YouTube channel or if you are in my masterclass, you will know that this is one of my favorite things in the world. Combination of equal lows with imbalance. What makes this pattern even greater is the top side. This forming parabolic liquidity as our target. Actually, this is a very nice example of the common and repetitive pattern in the price action world. But the question is how to trade this. Now let's zoom in the area and talk more. Once the price got the required liquidity and fill, see what it is doing. An inner market structure breaks with a small imbalance area, then the price pulls back into the discount zone for more precise entry. Now we use this large stop loss to cover the inner swing low area because we have no idea here how much the price can go down before the main move. Actually, this is a very nice example of a 2-hour trade setup. Now get back to some reality here. What are the chances of you catching this trade on time? Actually, it's pretty low. Mostly many miss the first setup. You may be sleeping or busy with something else there, or you just didn't see it in the first time. The beauty of this repetitive pattern is generally followed by a couple of extra breaks for further secondary entries. Notice the price breaks one more time, again drops to the discount zone imbalance area for another entry chance. And again, your logical stop should be under this very deep low to cover yourself because we have no idea how much the price can pull back. This is why we generally build setup like 2-hour or 3-hour most of the time. You cannot just go out there keep setting those 5-hour, 10-hour setups with tiny stop losses. Trading is not that simple. They will stop you out so many times. So let's summarize this pattern with even more basic visuals. Price breaks strongly and it creates our masterclass structure box with a protected low below. Buyers are in main control here. Smart money creates these equal lows below for extra inner liquidity. At the same time, this nice parabolic liquidity builds upward. Price drops to the structure box imbalance area and also sweeps the liquidity and gathers all the liquidity and fill it needed for the next rally. Then the couple of consecutive breaks with imbalances give you around 2 or 3 trade chances to enter. Okay, let's do a full top-down analysis on our great coin Solana. But before that, let's check this out. How are the markets today? As you can see, totals are quite strong. And then the major coins boosting and pushing their limits. Lastly, the USDT dominance is weak. What does it all tell me? This is a strong day, and it is best to look for long trades rather than short trades. As simple as that. When you look at the Solana chart on the weekly, there are interesting things. Notice these 2 significant imbalances, which were holding the price. But only this is not powerful enough for us to make a judgment yet. If you go down to the daily chart, you'll notice this liquidity sweep area, which is also followed by a market structure break upwards. What else can you see here? Yes, a natural support and resistance flip area, which is actually a breaker block in some sort of form. And also check this inner daily imbalance as well. Again, what does it all mean? It means that this is an extremely strong area where the price may react. Again, as simple as that. Let's check out the masterclass momentum layout. Of course, we are now using our beloved ICT high time frames indicator. This indicator allows me to evaluate multi-time frames at once. So I can see so much at a single look. First of all, this is a very important price level. It is the PDH, previous day high. If you are in my masterclass, you will know that I use them as amplifiers to boost the entry locations. Notice the natural support and resistance flip right at the previous day high as well. But the most important thing here is 4 imbalance taps, which come from 4 different time frames at once. This is the core of my masterclass strategy. So we have everything we need to look for a trade now. What we're gonna do is this. We will observe this amazing area in the low time frames and seek more precise entries. Now, let's zoom in this area. As you know, this was the area that 4 imbalances were tapped or filled from the higher time frames. This support and resistance flip point, what I love the most. It is such an amazing and simple price action concept to look for. Now, in the area, let me even zoom in more and more and talk about the specific entries. In our point of interest area, see what happens. Market structure breaks, followed by a very large imbalance. Price drops to the discount area, into this small version of SR flip. Our logical stop here will be again this protected low, a simple masterclass 2R setup. So, what really actually happened here? Let's discuss it again. Price strongly breaks and then drops back into this SR flip area. It is not just an ordinary area, it is the multi-time frame imbalance zone. Then you have your point of interest to look for trades. What is next? A market structure breaks with a small fractal support and resistance flip and imbalance. You see, all price action is actually fractal. In the weekly, in the daily, in the hourly, or in the minute-based charts, I always seek the same things. Okay, let's focus on the ENA coin, which gave beautiful setups in the last 2 days. This will be an extremely educational and practical video for most of you. As you noticed, ENA has been crushing badly in the recent weeks, since the beginning of 2025. But this crash slowed down recently, just around this weekly imbalance area. ENA has become one of the top gainer coins in the recent days, getting interest from the buyers. When you look at the daily chart, you can easily see the price reaction of this SR flip area in general. If we get even closer on the area, you'll see that buyers step in, push the coin upwards to this imbalance area. Let's drop even more to the 2 hours time frame. See what happens. Structure breaks, price pushes back into this imbalance and it reacts strongly. Now you may ask this: stop the crap, BS, bullshit, bullcrap. Where did we find the ENA coin? Because the ENA coin was one of the top gainer coins from yesterday in the Binance futures. As simple as that. I saw it yesterday, then I quickly analyzed it. Extremely simple way to find powerful coins to trade. Remember, we reside with the power, we scalp the momentum. Now our beloved indicator, which is the ICT high time frame indicator, helps us to snipe these entry areas. With this indicator, we can see so much in a single layout. Notice this area of 4 time frames with 4 imbalances. This is how the rally ignited at the bottom. These are the areas where we start to seek trades. Now let's go down the lower time frames and talk further. Even though price dive into this 4 imbalance area right here, there's another important price level that we must be careful about. This SR flip zone. This is a very practical and lovely zone. So we have to talk about 2 trades at once about ENA coin. First trade chance was here at the 4 imbalance top point. Notice how the price sweeps inner liquidity and further liquidity waits for us in the top area. Classic structure break and a compact 2R setup. I think everything is clear right now. Stop the video at this point and tell me, do you notice the gigantic power of 3? This is your homework. If you see it, please type PO3 in the comment section. What about the second trade? Second trade is about the pattern we talked about recently, SR flip area patterns. Now this crazy gigantic equal of liquidity gathered right above the SR flip area after our first trade. Notice the perfect equal lows. After a while, price strongly dives, clears all the liquidity, and then a low time frame structure break and another 2-hour compact trade. So, what really happened here? A massive SR flip area comes into existence. At the same time, there is this 4 time frame imbalance tap area, which gives you a quick trade opportunity based on my momentum scalping strategy from the masterclass. This will be your first trade. Then the classic equal low pattern combined with SR flip area. This gives you the second trade chance. This is more based on my main trading masterclass. You see different patterns and different entries based on whatever charts gives us. Today, we will do a different kind of video. Today, you will discover your trading style and improve yourself at becoming a better trader. Do you know why so many traders keep failing? Because they try to replicate others 100% without thinking about their personality, lifestyle, or emotional levels. This is the video about finding your trading style. There are 3 main trading styles. First, pattern traders, using repetitive patterns mostly based on RR entries. Second, order traders, using specific price levels based on multiple order entries. And then the session traders, using session openings, trading mostly the volatility. Now, as a trader, you must try all 3 trading styles and record your performances and see which one suits you the most. Let's talk about the pattern traders first. Pattern traders observe the repetitive patterns in the markets and wait for the entry. Based on a specific price action, they determine their point of interest areas for the entry. This can be any pattern that you can enjoy. What you see here is one of my most favorite patterns to trade, a combination of multiple smart money concepts. Now, the pattern traders use broker alarms so much. Once they have a POIA area to trade, they generally set an alarm right above this area. Once the alarm fires off, you are ready to trade. But setting one alarm is mostly useless. You need to set multiple alarms on multiple asset classes so you can have a higher chance of trading. This is the core of pattern traders. The good side of being a pattern trader is you can trade anything you wish for, and you'll be looking for the same patterns everywhere. However, checking all these patterns in tens of other assets can be quite troublesome. This requires high effort, discipline, and time. Pattern traders generally have a regular morning routines. You check all the assets and set your alarms. They can be day or swing traders based on their preference, but the patterns they trade always the same. The worst side of being a pattern trader is an alarm may never hit, or it can fire off while you are sleeping. There's a chance of not trading every single day. The best side of the pattern trading is, now you know that there is an A+ pattern, a pattern that you really enjoy to trade. You simply set your RR-based setup and leave the screens alone. On the other hand, RR-based trades can be tricky if you are trading the low time frames. Too many possible stop losses. How about the order traders? What kind of traders are these people? Order traders mastered order management rather than patterns. They have a large point of interest areas. They generally use Fibonacci tools, gaps, imbalances, or different kind of tools to determine some specific price levels. So they are not precision traders or snipers. Instead, they are order managers. These traders do not prefer using RR-based setups. Instead, they make small and periodic entries on certain price levels. And they dynamically manage their stop losses. They do not have hard, certain stop losses on some price levels. As you can see, simply they are orders, position, and active risk managers, giving active decisions on the go. Just like pattern traders, order traders can trade anything they wish for. You'll be looking for the same price levels, similar levels everywhere. Order traders mostly prefer specific time frames. Many order traders combine hourly and minute-based time frames, determining a good and large point of interest areas. However, placing so many orders can be quite troublesome. It can easily get out of hand and confuse you a lot. When you see order traders, you will notice that they have like crazy win rates, like 80-90% win rates. However, this is mostly an illusion, since they have very small positions without hard stop losses. They generally tend to make small gains, but when they lose, they will lose quite a large amount. You can make like $50 every day for 2 weeks, but you can lose $5,000 in one single day with bad management of orders. Our last type is session traders. This is one of the most common traders in the world. Session traders prefer market openings, such as London or New York Open. They are generally volatility scalpers. Most common is New York Open at 9:30 a.m. You will see these crazy price movements when the market opens. Most session traders are micro scalpers. They use extremely high leverage or high amount of cash. Most use funded accounts. Scalp the charts in matter of seconds or minutes, extremely quick in and out. However, a session trader can also be a pattern or order trader at the same time. They can wait for their favorite patterns or just make multi-order entries and manage them actively. Session traders prefer to master one asset generally. The one that traded most is NQ futures, the Nasdaq index. Biggest problem of session trading is there may or may not be a great setups or patterns at 9:30 a.m. We don't know that. Basically, you'll be trading whatever market gives you. High volatility is great for our traders because we make money when the price moves. At the same time, handling a high amount of money in 1 minute time frame is a crazy business. A mistake can cost you a lot of money. The best part of session traders is it is like a fixed part-time job. You wake up, wash your face, wait for 9:30 a.m. and trade it until 11 a.m. and you are done for the day. After 11 a.m. you are free to do whatever you wish for. So, my friend, which one are you? Are you a pattern trader? Pattern traders are relaxed and casual traders. They have no rush at all. They only trade their patterns and wait most of the time. They set RR-based trades and leave the charts. Or are you an order trader? Order traders are more position managers rather than traders actually. They manage positions and risks. They constantly watch the charts and handle the positions. They do not enjoy RR-based entries. Instead, they use dynamic orders. If not, you may be a session trader. Session traders generally see the trading as a part-time job. Open the charts at 9:30 a.m. and try to trade whatever market gives them and leave around 11 a.m. That is it for the day. Okay, have you tried them all? Have you decided yet? Please type your style on the YouTube comment section so I will know what are you. As you already know, Bitcoin made this gigantic crash from $105,000 to $90,000 in just 4 days. Of course, our main question should be how can we trade these movements from early points? Your biggest helpers again will be imbalances. Remember, what is an imbalance? As the name suggests, not balanced movements in the market. It is the definition of something big happening in the market, and buyers and sellers cannot match orders anymore. Some side get overly dominant. If you know, at the end of January, we started to have these rumors that Donald Trump will sign a policy of new tariffs, 25% taxing against Canada and Mexico, and extra plus 10% taxing for China. And in the 1st of February, this created massive reaction in the markets. Bitcoin was the earliest to react to this news. It caused this gigantic drop of 15%. Before we move on, I have to talk about Donald Trump. Trump is not your regular European president. He's very direct and tells whatever he thinks. In the next 4 years, you need to get ready for a roller coaster in all the markets. A rallying market can crash in the next hour, or a 20% crash can recover in just 1 day. Anything possible with Donald Trump. Now, day traders, I think you are extremely lucky. We will have so much momentum and volatility to trade in the markets. Joining these rallies or crashes quickly, getting in and out will be great for us. On the other hand, if you are a swing trader, it is probably be harder for you because the longer you hold a position with Donald Trump, it will be harder to manage because you can be stopped out anytime. However, for swing investors, especially with my working agents, it will be probably a heaven. Trump is a big supporter of the stock markets in the long run. Whenever he causes a big crash, it will be great for us to buy the dips with the working agents. Okay, back to the charts. In the hourly charts, you notice this gigantic imbalance. With Donald Trump or some other big news in the markets, the first thing you should go is down to the lower time frames, and the rest is simple price action. First, watch out all the major breaks and draw your structure boxes. With every major break, a new protected high will appear. As long as price protects these highs, we only try to short the markets, especially a crashing or a rallying markets. But in here we have another problem. You hate the micro market structure breaks. To find specific entries, what else you can do? You can again use only imbalances. Normally, after our structure box, we are looking for a classic an order block, breaker block, a SAR Philip area. But this time, we will not look for those. We will only focus on newly created imbalances after each major breaks. We will use market orders as quick as possible and take the profits on the go. Let's see some in close action. First, you confirm the break, a weak or a strong break, and a protected high. You know that sellers are dominant. You also know that a news crashing the markets. Watch for the moment of an inner major sell which creates an imbalance like this one here. Right after the imbalance, you join the sell with a market order. And you repeat the process. Again, confirm the break. Sellers are still protected. Wait for the next major sell which creates an inner imbalance and join the movement with a market order. In this style, you cannot use classic risk and reward because you have no time for it. Also, possibly stop loss will be a huge. This is not great for us. Basically, you will keep repeating the same price action until sellers lose a protected high. What you do here is using freshly created inner imbalances and selling directly after they are created. You are joining the dominant crash party with sellers with each movement until the crash stops. As I said, with this style, you must use market orders right after an imbalance is created. Join the big crashing party. It is generally impossible to set a proper risk-reward here. You will not have much time for it. You market sell and take your profit. Repeat the process until the crash slows down or stops. This is actually not a new strategy, only a different way of entry model. It is very close to my rally strategy from the masterclass. Also remember what we were doing in the classic entries. We confirm a break and a structure box. This part is similar. But in the classic entries, we were looking for a order block, breaker block, an inner imbalance or a SR flip area for the reaction point. Then we were opening lower time frames to confirm an inner structure break, which gives us an easier RR risk-reward tool to use. But with only imbalance model, which is very similar to rally strategy, you do not need to go into deeper time frames. You directly short when you see a big movement that creates an imbalance. Of course, you shall only do this with the main direction of the market. In this case, with the crash with the Donald Trump. As you already know, there is an unending fight between buyers and sellers in the markets. As a trader, your best approach should be joining the dominant parties. When you look at the 15, 30, or 45-minute candles, or even early time frames like 1, 2, 3, 4 hours, you'll notice this kind of price action, constant green candles. These moves generally start with a nice momentum imbalance. This is a buyer dominance. Or the constant red candles ignited with an imbalance. This is a seller dominance. So, the question is how to join these dominant parties and how to trade these in action. What you are looking for here is a top gainer coin of the day, called with a weird name of Chims. And also, why do I use this indicator called ICT high time frames? It shows me all the price action you need from multi-time frames. First of all, notice how the early party started, where the initial rally ignited. As you can see, around right this imbalance area. What happened after that? A very dominant buyer rally started. Let's take a look at the area together with the 5-minute full chart on the left. Notice where the party started here again, and then the dominant buyer action followed. More importantly, notice this momentum imbalances area inside the dominant party. The moment that buyers push the coin instantly. Now, I want to watch the price action closely again in 5-minute charts only. First of all, notice how the early rally started one more time. It started right around this SR flip area. But can we go back even further and evaluate the market structure first? Here is your earlier structure box with the protected low. Then it follows another break and a new structure box with new protected low. As a classic trader, you can make the entry right here like a compact 2-hour setup. But are you afraid of too many stop losses? Is there another option here? Let's discuss it. I know that many of you are very tired of stop losses with classic risk-reward setups. Then your only option left is using multiple orders and creating like price averages. Or if your broker allows, create multiple orders with dynamic stop-loss management. To use multiple orders, you must determine many entry areas first. Let's check out. First of all, Fibonacci is a great tool. You are making your entry here with SR Philip area on the imbalance with EQ from Fibonacci. This is your first partial entry with your mental stop loss. Then let's see. There is this another great level here. But why? Why this area? Because if the price drops further back, it will be the optimal trade entry area, the golden zone that combined with the inner imbalance. And your last entry should be under this area for the further imbalance and this inner deep liquidity area. So, what did we do here to avoid direct stop losses? For example, instead of using a risk reward like risk a $60 to win $120 setup with 2 hours, what we did is we divided that $6 risk into 3 small pieces with $20. We made multiple entries with our mental and dynamic stop loss in the case of price drops further. In another sense, we just created ourselves an average price. Now, how about trading with the dominant party? Let's talk more about the continuous price action. See what happens here after our first entry tries. Structure breaks one more time and creates another structure box with a new protected low. Now we also know that price is pushing so fast. Buyers are quite dominant with those green high time frame candles in a row. But again, you are very afraid of using the risk reward tool because of the constant and instant stop losses. What we do is again jumping with a partial trade order here, joining the dominant price movement with the buyers. You see what we do here with other time frames clearly. Notice where we joined the price movement. We jump to the dominant price movement of buyers with high speed. We are not afraid because we are not using a risk reward. We are now entering with partial orders. So what if the price drops further again? What you do here again, create other multiple orders until the protected low area. As long as we protect this low, we are bullish here. So basically you are not cursed to use RR tools and be stopped out like 10 times a day. There are other ways of trading like my yo-yo style trading from the masterclass. All we do is a very simple price action of dividing orders into pieces and making multiple entries instead of making entry at once, while we dynamically manage our stop losses and give our trade some room to breathe and recover. Let's talk about how to figure out early rally stages and how to trade the dominant ongoing movement in the markets. Do not just think about momentum coins. This can be any chart that you are looking for, crypto, forex, gold, or even Nasdaq sometimes. You can notice right here, price slowly pulls back into this inner imbalance with 30 minutes, 45 minutes, and the 1 hour charts. So I divided this video into actually 2 parts, detecting and trading the early rally points, and then we will talk about how to trade the dominant movement on the go. We are now in a 1 hour chart, 1 hour time frame. Notice the swing failure pattern right here, followed by a microstructure break and this tiny imbalance in this chart. Let's drop to the 45-minute time frame. In here you can notice the more obvious and larger imbalance area. If you drop to the 30 minutes, the same imbalance area is also there. So, now we know that this is an interesting area of multi-imbalances. Now dropping to the 15-minute time frame for further analysis. First thing I noticed was this support and resistance Philip area with multi-level imbalances. Notice how many times price rejects this price level. Keep going down until the 5-minute charts so we can see and observe the price action better and more in detail. With this vision, we have a very large and strong movement here, as you can see. If you use the Fibonacci tool, you'll notice the large tradable area with imbalance and the optimal trade entry. Now, price dives, and you can make your first cost average entry right here. Price dives again, you make your second and third entries. You can even set an order up to this deep level of optimal entry, because no one knows how much a price can pull back. As you can see, we are not using risk-reward tool here, manually managing the orders. Now here is the fun part. You find all this price action right here in this area quite complex and boring. Maybe you even missed all this move. So my question is, what else can you do after this? Okay, let's check the higher time frames again, as you can see on the right. So, the question is this. You cannot catch these stupid early starting rally points. You hate this smart money concept and you're so annoyed by them. What other options do you have? First of all, I have to tell you again, you do not have to catch the early exact sniper price action movement. All you can do, trade the dominant move on the go, just like this one here, the rally on the go. Okay, as you can see, price breaks with a nice imbalance here again. This is a nice small dive area to trade the breakout. Then another fast move and a small pullback to this inner imbalance, another trade. Then another nice break and small pullback to trade. As you can see, what you do here is jumping to rally with each pullbacks, using small divided orders instead of a hard stop loss with classic risk-reward tool. Okay, I hear you out. You hate this imbalance bullshits and tired of smart money concepts. Then all you can do is just get back to the basics. Basically, trade the bull flag breakouts on the ongoing rally. So in simple terms, waiting for simple bull flags and wait for the breakouts and joining the dominant party with a strong move. However, you must be aware of this. This strategy will never work on slow or choppy assets. You will need an ongoing rally or ongoing crash to trade this. Otherwise, it will not work. Let's check out this quick morning trade practice with Pendle coin, one of the top gainers of the day. What you see here is our very simple indicator called ICT High Time Frame Candles indicator, showing me the multi-time frames at once to observe the price in much better detail. First of all, notice how the price taps multiple imbalances at once, 30 minutes, 45 minutes, and the 1 hour price locations. Also, if you check out the 2 hours chart, you'll notice the dominance of the buyers. Solid, big, green candles in a row also keep taking the previous highs to push the price up. Now, if we open again our low time frames on the left side, such as the 5 minutes time frame in this case, you can clearly see the price action combined with high and low time frames together. Also, this is a very special price level. First of all, it is a natural support and resistance Philip area, as you can see. However, it is not an ordinary one. It is a specific price level, a masterclass amplifier, the previous day high level. Remember from our masterclass, Amplifiers are great boosting points for your entry locations. So, if we can sum all it up, why is this price point very important? First, point of 30 minutes, 45 minutes, and 1 hour imbalance taps from the higher time frames. Second, buyers dominant if you remember the 2 hours chart. Third, a natural SR flip point area. And lastly, the point of PDH, the previous day high amplifier point. All comes together and makes this area a very nice point of interest zone to look for trades. First of all, what is your logical target here? Obviously the above liquidity point. If a trend wants to keep pushing higher and higher, it needs to take out the upper liquidity points on the go. The rest is simple smart money entry, a classic market structure break with an imbalance. However, in this trade, unfortunately, there is no great reward. Sometimes this happens. We cannot do anything about it. This is like mostly 1.5 hour trade. Because, as you already know, I'm against very tight stop losses. We need at least some cushion, a bit large stop loss for our trades to breathe and move around. What about yo-yo averaging? Imagine that you made your first entry at this logical place, but price did not move up. Instead, it started to crash on you. Next logical area would be this inner SR flip with nice imbalance. So overall, this would be a nice zone to create some average price. However, if we look down further, this deeper parabolic liquidity area with imbalance also looks interesting. So it is possible that it would even crash deeper to get more fuel. But in my opinion, this is a very, very large zone. But in my opinion, 2 yo-yo would be enough here. In the worst case, cut the loss and move on. Because if the price keep crashing further and further, it also will mean that sellers are getting dominant over buyers. Remember, averaging does not mean you need to average forever. Maybe in investing you can average a lot, but in trading there are some points you need to cut the loss. Let's chat about this interesting coin called USDT. It had a very nice price action this morning. First thing you can notice is this is a very strong price action with momentum imbalances. At some point, price dips to these momentum imbalances and taps before the rally. If you check out the 2 hours time frame on the right, you can notice that how dominant the buyers are, strongly pushing the coin up. Now, let's open the 1 minute time frame on the left side and talk further by combining high and low time frames. Notice the beautiful point of price rally happens in this case. However, this price action is also kind of troublesome. Notice this deep, strong SR flip area with imbalance below worries me a lot. So, this is not an ordinary or easy trade. There are many other things to consider here. Let's focus on the 1 minute chart and dissect the area even further. Okay, in this chart, we have to talk about a couple of things. As you can see in this area, there is no particular market structure break, but only a small price switch happening, with inner momentum imbalances. This indicates an entry chance here, but very hard to use for a classic risk-reward system. So, you need to jump with a yo-yo cost averaging. Second order point should be the under area for deeper liquidity sweep. And probably the last order should be in the area of this classic SR flip zone. Now, if the first order works, you shall not get greedy. Get your 3% move, and if you use 20x leverage, it should give you around 6% profits and then exit. If the price dips further and gets your second order, an average created here. Again, the only thing you should care for is 2 to 4% move at most. Get in, get out, get in, get out. If all three orders hit, now you have a big average here. Again, the same, looking for a quick move to get out of the trade. I hope that everything makes sense until this point. Now, what if the price keeps dropping after all three orders taken? Then what? In those cases, I do this, waiting for a small pullback to my entry location and I try to cut the loss. Basically, I will try to minimize my loss as much as possible. You should never keep averaging down forever in trading. It is extremely dangerous. You need to understand that, especially after COVID, trading is not the same. It's not easy at all. If someone comes to you and tells you, trading is so easy, quit your job, become a full trader today, and you can get rich in a year, he is definitely lying to you. Trading is not easy at all. Classic risk reward systems are not working well anymore. Markets are very, very choppy. You need a new kind of mastery of order and risk management. You need to focus on managing open trades with dynamic decisions. Today, I want to do something different, talking about Euro USD. I noticed combining classic smart money concepts with momentum scalping techniques giving great results in all the markets. As usual, we will be using our ICT high time frame candles indicator to spot possible entry locations. If you notice here in the 2-hour time frame, the rally starts with Euro USD right here, the early rally. Later on, price gets a break and pullbacks and dips into two little imbalances from 30-minute and 1-hour charts. And if you look at the 45 minutes, who do you think is the dominant side? Notice the bottom, momentum imbalance, the bullish side imbalance. Notice the green candles in a row. Obviously, buyers are mainly dominating these mid-time frames in the Euro USD today. Now, on the left side, I have opened the 1-minute time frame to see the low time frames in clear price action. This yellow circle indicates where the price dipped into multi-time frame imbalances. Notice this area of perfect support and resistance flip point. Notice how the price rejects the area 4 times before in a row. And once it's broken, it is used as a resistance, right at the point of our multi-time frame imbalances. If everything is clear enough, let's talk more on the smart money side this time. This top area is our previous day high as our institutional liquidity point. If you remember the masterclass, I have said many times, smart money loves to get close to these areas, but dropping back to create some liquidity. This is exactly what happens here, a parabolic inner liquidity created right before the previous day high was taken out. Now, let's get closer in the area and talk even further. Now, we know that this is a perfect example of SR Phillips zone, also a point of multi-time frame imbalance taps. Plus, we are in the very nice optimal trade entry zone as well. From now on, the rest of the move is simple smart money concepts, structure breaks, and imbalance-based entries. Notice how the structure keeps breaking until it takes out the previous day high. This gives you 3 times 2-hour setup chances. If you miss one, you can take the other one. So, what happened here? Let's go step by step with price action again. In mid-time frames, we used our ICT high time frame indicator to spot a possible entry point. We noticed these multi-level imbalance taps and we decided to observe the area further. Then we learned that it is an area of perfect support and resistance flip location, combined with an inner optimal trade entry location. The rest was classic smart money entry setups, which you probably have seen like a million times by now in this channel. I think this Euro USD was a magnificent example of how can we combine classic smart money concepts with momentum scalping together. Let's talk about trading powerful momentum on the go. This morning, I noticed that Nasdaq was having a great day. When you look at this chart here in the 2-hour frame, who do you think controls the price? Who is the dominant and who is the pushing the price? It is obviously the buyers. And you can see that price fused itself up with imbalance points. If you closely look at the last price action, you can see that after a small pullback, price gets back into this multi-imbalance from multiple time frames at once to power up. Now, let's open the 1-minute time frame and talk in detail. The yellow point here presenting the 4 imbalance tabs from 30 minutes, 45 minutes, 1 and 2 hours. If you check the chart on the left side, you can see the 1-minute vision of where the price hits. Not just that, this is also a decent support and resistance flip area. Now we have a decent price action area right here to check and learn many things. Let's focus on the entry now. In our point of interest location, what really happens? Inner structure breaks and price then dips into our imbalance area, giving us a decent entry point. Price also hits the discount area as well, just below the EQ point. This is a nice 2-hour setup, nothing wrong with this. However, I can hear you out. You are sick of this market structure craps. Then what else can you actually do here? First of all, at least try to wait for a bullish break to see some power from the buyers. Then make a manual entry, no hard stop loss, a mental large stop loss. If you check out the left side, we are actually in the bullish move with the structure box. In my opinion, placing a second order right below the inner liquidity area could be wise. At this point, there are 2 yo-yo will be more than enough to see what really happens, how the price action evolves, so we can observe and make new decisions on the go. So, let's sum it up. What really happened here? We know that price is really bullish, buyers dominating the Nasdaq, pullbacks just giving us some entry chances. By using our momentum layout from the masterclass, we know that we are in this point of general interest area with multiple imbalances to look for a trade entry. Beside all this, we know that this is a decent SR flip area as well. So many smart money combinations here. Then you notice the inner structure break and make the entry. Very classic smart money concepts you already learned a lot. GLM was one of the great top gainer coins today. But how these all price actions started, let's talk about that first. As you can see on the daily chart, this price action was bearish before. Structures were breaking downwards. Notice the imbalance here. What is the purpose of an imbalance? It should keep pushing the price in the direction of the main trend. So the expected move was here to have a new break downwards. But what really happened here? Instead, the imbalance failed and the buyers took the control back. Imbalance strongly failed, as you can see. So who is the dominant side here? It is the buyers as for today. By using smart money indicator called ICT high time frame candles, now we can observe the price action much better in multi-time frames, as you can see. Notice the dominance of the buyers here. This significant move made the GLM coin the top gainer of today. So the question is, how we can trade these dominant rallies on the go? Okay, now let me open the 15-minute chart on the left side and see something. Notice the inner break right here in the 15-minute time frame. Now I'm switching to the 5-minute time frame. Notice the same break here. And finally, we are in the 1-minute time frame one more time, same break right here. This kind of breaks gives us interesting trade chances. An inner time frame structure box appears right here. It is also a natural SR flip area with inner imbalance. This can be a very natural quick entry point for you. So when you trade ongoing fast rallies with the dominant side, you shall quickly enter and exit most of the time. Grab like 2-3% move and get out. So let me explain the price action again one more time. We know that buyers got very dominant in this coin. In the low time frames, you have noticed the extremely fast price action, naturally making many bull flags which you can also try to trade. But sometimes these obvious structure boxes come to life, giving us much more precise movements and entry points to trade. So these should be our great trade chances on the dominant trend rallies. Before we end this lesson, I need to talk about something really important. Why normally I try to trade the multiple imbalance points in earlier times? Because I want to catch the early rallies before it is extremely extended. Basically, each rally generally have two stages, early and late stages. When you take trades in the early stages, you will have a higher chance of successful trades because price is not extended yet. Once the price is really extended, I can still trade, there is no problem. The issue is overextensions generally crush us very hard at some point, and it is almost impossible to know when this asset will gonna crash. I think that this Torch coin is a great example to work on, practice our skills. It has a lot of interesting stuff to talk about. If you look at this coin in early charts, you can see that there was this battle between buyers and sellers for a really long time. But in the end, the buyers won the game and made this gigantic break after the long-term accumulation. In this 3 hours chart, notice the imbalance area right here. But the thing I enjoyed more is this support and resistance flip area. See how it rejects the area around 4 times before it is breaking extremely powerfully. If I drop to the 2 hours time frame this time, you will notice another inner imbalance right at this point. And if I continue to drop the time frames until 1 hour, you can see this 1 hour deep imbalance area as well. So this is a really interesting price action. Now let's drop to the 5-minute chart and talk more about the price action. First thing you need to focus on is this very clear target above with the previous day high and the previous week's high. A great institutional level waiting for us here to be taken out. Right at this point, price taps this 3 and 2 hour imbalances at the same time. But I also know that there is this deep 1 hour's imbalance as well at the bottom. Okay, can you see the future? I don't think so. Are you the oracle from Matrix? No, I don't think so either. Do you have kind of magical abilities to guess what will happen next? I'm not sure you cannot. So, you have no idea what will happen next. Price can easily deep dive here into this 1 hour imbalance area before the rally. Nobody knows the future. But what really happens here? An inner structure breaks really strongly with an inner support and resistance flip area. Also this lovely inner imbalance as well. So your first order, your yo-yo entry, should be here, which you can jump with a market order if you wish. Now my second entry should be right on top of this 1 hour imbalance to cover for further deep dive. For a starter, 2 yo-yo would be enough here. So either way, at the end, get your 3% move and walk away. In this crazy markets, we just cannot afford to be greedy anymore. So what really happened here? Let's do a recap session. You have noticed a super SR flip area, which actually collides with multi-time frame imbalances. but you have concerns about deeper imbalances for deeper pullbacks for the future. So instead of a classic risk reward, you divide your orders into smaller pieces. At the end, this is a very simple pattern actually that we use, especially in momentum trading. I have to say this is not overly complicated, but seeing this in real charts with real candlesticks sometimes confuses us. ARK was the top gainer coin of the day. It was the by far number one with 20% gain. The moment I saw this coin, I knew that it was tradable. By using our lovely indicator called ICT High Time Frame Candles, I quickly determined the possible entry location on the chart. As you can see, price dipped into these lovely 30 and 45 minute imbalances, but of course, you just cannot jump to a trade here. You need to observe the lower time frame price action to make decisions. Now, let's open the 1 minute time frame and discuss further. This circle area in 1 minute presents where the price hits 30 and 45 minute imbalances, the moment of seeking the entry. I also noticed that there were these nice equal highs above as our main target. Let's zoom in the area and talk more. As you can see here, the price drop stopped and the inner structure turned bullish, making new inner market structure breaks with breakout structures. Price started to push upwards here. So in my mind, I had a projection moving upwards until we take out these lovely equal highs. Very nice idea, right? So after one of the breakout structures, I just jumped into trade with the yo-yo. I basically divided my order into smaller pieces and started making small entries. I have also placed other two smaller yo-yos under these inner liquidity points against a possible deeper pullbacks. This was not an easy or short-term trade. It made me wait over 1 hour for a decent profit actually. The moment I saw a 3% plus gain, I cut the trade. Just watch my last 50 videos or so. I keep saying the same thing. Do not get greedy. Take your profit and move away out of the market. Now let's see what really happened later on. If I kept the trade open, as you can see, I could have done over 5% move, make over probably 100% gain in the position. But also notice that price never hunted the equal highs. So what I expected did not happen. Why? Because I cannot see the future. No one can. All I can do is just risk and order management. That's it. If I had to trade so much longer, I could have easily lost the cash and price crashed very hard later on, as you can see. So I think you understand that trading is not about strategies anymore, not anymore. You need to accept this. It is all about risk and order management. More importantly, controlling your greed for more and more profits. With my masterclass yo-yo technique, seeing these 3+% moves will be more than enough for you. Get out of the market. Trying to hold positions like for plus 10% moves is just pure gamble anymore, and is extremely high risk. Price can easily crash and you can lose all your entry cash. So as long as Trump is president, get ready for choppy price actions. Rallies will crash in a matter of seconds. Crashes will rally after a single tweet. President Trump is extremely unpredictable guy. He affects all the markets in the world. Keep your trades short as a day trader. Get out quickly with small profits. Waiting for gigantic gains is not wise anymore, I'm sorry. Okay folks, take care for now and see you next time. If you have completed the free trading course and feel like you improved your trading skills, but you need more, an extra, a boost, and you want to move to the next level in your trading life, my masterclass is ready for you. You will learn liquidity, inefficiencies, and structure mastery deeply. We will look at forward and reverse trading with momentum super boxes. You will learn how to confirm your entries with magic alignment system. Finally, you will discover a strategy called YOYO Strategy, which will open new doors for you about taking and managing trades. If you are interested,